Today was yet another exciting, very powerful day in the market. We had some amazing AI stocks, mainly CXAI going over a 300% profit and IDAI going over 100% profit. Both were on the watch list this morning. Both had very solid entry opportunities. I unfortunately only traded one of them. I traded IDAI. We're going to break down both of those and just kind of run through the motions of explaining why I was focused on those two plays, why I had the plans that I had, and how specifically on IDAI, I locked in those partial profits along the way. Just made a very, very nice day trade. So a lot of good lessons of the basics in today's webinar. So I guess we can just focus in on CXAI first. So yeah, like I said, CXAI was hands down the strongest stock of the day by far. You can see today, just before pre-market, it was at about 240s per share. And in the afternoon, they hit a high of nearly $10 per share. So monstrous move. And so this one, they had no news. But if you've been familiar with the market over the past few days, then you know that right now the main catalyst, the main hype over the entire market is AI. Obviously with stuff like ChatGPT, AI is taking the world by storm and it's reflecting in the markets as well. Overall, AI is a very, very strong place to be in the market right now. So yeah, CXA had no news, but you can see yesterday, just before market close, it had this very big run up, kind of out of nowhere, right? It just kind of spiked up on decent volume. And the first resistance that it set was right near 230. So that was the first resistance in its spike. That's always a very key level to mark off. And then just for sake of this lesson, let's mark off the top of this wick as well. If you've been watching the webinars, and you know that in this current market where there's so much range, you might not get the pullback all the way down to the line chart. And it is definitely worthwhile to plan trades starting at that wick and then adding into that line, right? Using support as an area and not so much an exact point. So with that in mind, let's go to the daily chart, right? It has one key level of previous resistance, and that's right here, right near 197. And in fact, that would have been a really good entry, just taking the risk due to it being in the AI space probably, because that is where it found its first support. You can see in after hours and pre-market, that's where it bottomed out at $2. So that was a very good entry opportunity. I didn't take that. And then you can see, early this morning, it broke out through this first previous resistance. So now we're getting into the strategy, right? This is my core strategy. We talk about it literally every single day in the room. And it's just using the simple idea of previous resistance as new support, right? Here's the previous resistance in between 230 and 245. Unfortunately, I was a bit late with the webinar, so I was more focused on doing the webinar. I was hoping that we would get one quick wick down at market open to get filled, but I missed my entry on CXCI off 245. You can see it tested that support right near 9:05 and 9:10 a.m. So by the time that I was, watching the charts, I had already missed that chance. So that was kind of unfortunate. But I was just, staying patient. I didn't want to chase it, right? Because ultimately, like if I miss an entry and I see that I missed an entry, if it starts to spike higher, one of my main rules is that I'm not going to chase into it at a higher price. Because I'm trading a strategy, I need to either get the exact price I want or don't touch it at all, right? I'm not here just to trade with the sole goal of focusing on the money. I'm here to make good trades. And one of the key concepts of making good trades is having good entries. So it spiked up. I kind of was just watching it. Once it broke out above the pre-market high, I was looking to use that level of previous resistance as new support. So, I made a plan to buy the dip off of 280, but it just never came around. I mean, lowest it pulled back was like 320s, and that just it wasn't good enough, right? It wasn't good enough for me to make that a strategy. So really for me, the only entry that I really missed was this one here in pre-market. But, just for the sake of the lesson, this is literally my strategy, right? And the way that I would have planned this, was to, go long off of like 245, have some more size down near 230, max loss be a break below 2, have maybe first target 280, but you could probably squeeze out a bit more because after the break over $2, it has so much range. Like you can see just here on this chart, the previous support that shows here on E-Trade is all the way at 882, right? That's massive range. You could even just use this area here where it kind of bottomed out, $4, and that could be your first target. So overall, from a risk perspective, you're risking like 30 cents to make about $1.70 per share. That's really good odds. The chart on Thinkorswim is a bit different because if you look at Thinkorswim, this was the IPO date. So everything that you see from like here back didn't exist on Thinkorswim. Like all this, it wasn't there. It started here. And I forgot about looking at it on E-Trade. So for me, what I saw was that, it looked like the all-time high was at like 560. Now that's going to happen sometimes on these like newer IPOs. Sometimes some brokers have different data than others. That's why it's always a good thing to kind of double check your sources and just double check your data because you never know. You might have other levels that you can kind of gain. And like, for example, on CXAI, if you were solely focused on the Thinkorswim chart, then you would have not known that it would have been a good idea to lock in partial profits at 882. But if you looked at E-Trade, you could say, hey, it's a line, might as well lock in partial profits there, if you're long from $2. Because overall, that is pretty much where it overall topped out, pretty close. And that would have been a perfect target. Yeah, I mean, overall, just another great example of why, for me, and from what I've learned from trading small caps and penny stocks, charts are the main thing, right? This stock had no news, right? It had no catalyst, but just due to the fact that it was in the AI space and it's a low float, people caught onto it, had a really good chart, and there was a very brain dead obvious entry using that very basic rule of previous resistance as new support, right? No fancy indicators, no MACD crossover, no Bollinger Bands, no stochastics, right? No moving averages, just very basic price action. You can see that, once you get that entry, if you just follow those basic rules of number one, locking in partial profits along the way, and number two, holding on to it as long as it holds previous resistance as new support, that's what allows you to have the patience to hold for these big moves. Because, I know from just my experience, when I first started trading, I was always so afraid to hold on because I didn't know how to look at these charts. And I would lock in for 15, 20, 30 cents just for a stock to run $5 per share, right? But if you can just look at this chart and say, all right, once it breaks it over 280, it is overall bullish as long as it holds 280 as new support, meaning you don't have to sell the entire thing as long as it holds 280. So even if it pulls back, it's okay. Just stay patient through it. You have to kind of be willing to give up not selling the exact top if you want to get those bigger moves. So you just stay patient. Once it makes that next breakout, just say, all right, great. Now, as long as it holds 340 as new support, it's overall bullish. See, it holds it just fine. Then from here, as long as it holds 374, it's bullish. Holds it just fine. And that pattern didn't break at all. I think even now it still is holding that overall pattern. Yeah, it is. Because right now the previous resistance is 622. So technically the 5-minute chart is still bullish. And that is a very easy way to kind of have that patience to just let the stock do its thing, right? So that's just kind of one thing. Obviously it didn't really matter here, but that is something that you can do. So yeah, overall, very strong play. It did seem like it kind of had a blow off top right near $9, but like I said, as far as the 5-minute chart's concerned, it technically is still bullish, right? It still is above 622. So, if you happen to be holding a position, the thing that I would be looking at is as long as it holds 622, I'd be willing to hold the rest. If I had a really good entry, right? Like if I was long from like $7, definitely not the play, right? But if I was long from like, 280 or like 245, yeah, I mean, like you're so far in the money, why not just risk to see if it could go higher? Granted, you lock in partial profits along the way. And that is a very just simple and repeatable strategy that, I mean, we've seen this week work almost every single day. So now the one that I did trade, IDAI, it was a good move. It went over 100%, and obviously not nearly as explosive, but this was the one that I was a bit more interested in yesterday in after hours when we first kind of saw these stocks. And so yesterday when I first saw this, my kind of knee-jerk reaction was, okay, I'm interested if this can hold this level 389. One of my main rules, like I always say that, but like one of my big rules is I don't really like to trade after hours. I would rather wait to see if the stock can sustain into pre-market and then maybe buy pre-market if I have to. So, I saw this kind of running up into the close. Now they did have news. IDAI had really good news, and that's why I was a bit more focused on this one. They had news that they had 3 patents for AI, pretty much. They announced that they had 3 new patents. I was like, okay, it's in the AI space. It's a low float. You can see the float is 3.1 million shares. So it looks pretty good. And then come this morning, we wake up and we see, okay, it's kind of selling off, right? Obviously, I'm no longer interested in 389, but I didn't want to just forget about it completely because I knew that this was a hot sector, right? Especially considering stuff like GFAI. Basically, if there's a company that has AI in the name, it's a massive spike. It's kind of like the .com boom back in early 2000s. It's happening now with AI. Just look at just quite literally AI. This thing went from like $10 to $35 over the span of a few months. BBAI, right? This thing had a big move. GFAI, and then of course CXAI and IDAI. So I definitely knew that, I wanted to kind of look more into this. And because it sold off a bit deeper, I said, okay, maybe there is a daily chart level that we could use as a dip buy area at market open. So I just went to the daily chart. And one of my main things I do is that, I just want to see where the previous resistance is. And when I say the previous resistance, I just mean like just go left and up and mark the first point that you see. So if we look at the current price action, right? If you just go left and up, you see $3 is the first kind of point of resistance that you see. So that is the technical previous resistance on the chart. So mark that off. And now you can see going into this morning, it was actually setting up for a very solid dip buy into that area. It actually tested in like 8, 9 a.m. just before market open, similar to CXAI. So I saw that, it was already holding as support, and I knew that I wanted to get a piece of this. And so instead of trying to buy exactly at $3, I just bought at $3.14 because I figured, this one has good potential. I'm not going to try to penny pinch for 14 cents when it can run dollars per share. So I sent my orders. I got in right near 314, just here on this first candle that pulled back. And I didn't realize how strong it could be. So I was definitely a bit more conservative with my exits. Number one, we do see that we do have this kind of previous resistance right near 390. And then obviously, the first intraday resistance up near 465. So those are my first 2 profit targets that I took. As it was holding support, I just waited, just let it do its thing. I didn't want to predict the breakdown. I just kind of let it do its thing, right? As long as it keeps on holding previous resistance as new support, you just hold the trade and wait. And as it got back above VWAP, I sent my limit sell to lock in my first partial into 389, and I got filled. It squeezed up, halted, unhalted, and then I got my next partial filled right away, right into this resistance here near the 460s. But then from there, right, because it wasn't really a failed breakout and I had already locked in my partial profits, I was okay with this kind of testing around, right? That's the benefit of taking partial profits. It allows you the patience to kind of sit back, you know you locked in your profits, and you can just let the stock figure out, is it going to break out further or is it going to pull back? That's my philosophy with it. So I was able to just kind of sit back and wait. Eventually, it was able to get the strength to break out higher. Right here, you can see it finally broke out. So it broke out. Once it broke out, I was like, all right, great. As long as it can hold this previous resistance as new support, it still is bullish. I had some next levels of resistance marked off like right near 560s. But the lockdown, my next partial was filled at 556. So during this spike, I got filled into 556 and then ran even higher. Now, by this time, because of how I planned my trade, I didn't really have that much size left. I only had a few hundred shares left. So now at this current point, I was like, okay, well, let me just swing the rest. I've locked in the majority of my profits and let me just see what it can do. As long as this holds as new support, it could go higher. And so that's what I'm going to be using to risk my remainder of my position and kind of treat it as like a swing trade. And yeah, that was pretty much that for IDAI. Very powerful trade, very nice move overall. And so even though I wasn't able to capitalize on CXAI, I was able to get a good trade on this one. Same key lessons, right? Have a plan. Make sure to plan the trade before you enter it. Know exactly what you're looking for. Know your entry price. Plan out your max loss to get your size using the trade planning calculator. And then just mark off your levels ahead. Lock in partial profits just along the way as it spikes. And then as long as it holds up the overall chart, you can stay patient and keep on holding. Just because you call yourself a day trader does not mean that you have to trade within 5-10 minutes. You can have a trade run all day. One thing that I recommend everyone to do is just look at your past 30 trades, your past 30 winners, and like actually dig in and look at them. Make an Excel spreadsheet and look, how many times did you sell and the stock went higher? And how much more could you have made if you just did nothing and just let the stock run, right? Most people lock in their winners way too soon. So you have to kind of figure out rules and ways to allow you to have the patience to hold for longer. And for me, that's a combination of using partial profits and following the chart trend. So if you stuck around for the whole video, then hopefully that means that you enjoyed this lesson and you enjoy the way that I teach trading. I want to help you on your trading journey. So I have a free 14-day trial for my entire course and mentorship, everything. I have a room called Trade Buddy where we help other people succeed in trading. And this is a 14-day trial, so you can jump in, get all of our content, get our course, learn everything. Try it out. If you like it, stick around. If you don't, cancel, no hassle at all. So I want to see you in there ASAP. Be sure to join before tomorrow so you can join in on the pre-market webinar where we're going to talk about the trades of the day. All right. So with that being said, catch you in the next video.